Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you to everyone listening in today.
Now, with the changing world economy, part of it due to supply chain issues, COVID, the war with Russia and Ukraine, any winners coming out of this?
Well, so far, and I think the investing world did change on February 24th when Russia invaded Ukraine. So far, British Columbia has become a winner, and not Vancouver, and not Kelowna, not Victoria, but northeastern British Columbia. And it's the natural gas country up there, and we've already seen some very interesting activity in terms of mergers and acquisition activity in northeastern British Columbia. Just last week, I believe it was, that we saw Vermilion Energy Trust on March 28th make or enter into an agreement with a smaller focused junior producer based out of northeastern British Columbia, and for those who are not familiar with northeastern British Columbia, Fort St. John is sort of the kind of the epicenter of the natural gas country up there. This junior was purchased or entered into an agreement to be purchased in cash by Vermilion, and it's something we talk about in our March energy stock report, which we just released this week. And it was one of our morning stocks from not too long ago, actually, just earlier this year in February, and the target the target company. And so it's a small company, but it's been developing these natural gas assets. And why all of a sudden did this the interest gel up there, and why all of a sudden did this company get purchased? Well, I got to believe a lot of it has to do with a reevaluation of BC natural gas assets in the light of the Russia-Ukraine war. As we kind of mentioned last month, we thought there'd be a pivot away from Russia as a gas supplier, and that means that countries around the world will have to start turning to other sources. And while we do not have LNG export capability yet in Canada, if we are ever to get it, it will be out of British Columbia, out of Kitimat, in that area. So the assets in northeastern British Columbia that are expected to be connected by pipeline to the export facilities in Kitimat are becoming more valuable as we get closer and closer to that pipeline potentially being completed. Now, there are, of course, obstacles still to completing the pipeline. It's under construction, but of course, we just saw a recent terrorist attack on that pipeline. I mean, we heard nothing but convoy earlier in the year from the mainstream media. But there was a vicious attack up on a facility relating to the pipeline that's going to connect northeastern BC to this export facility. So there is a possibility that the pipeline, could enter, could still be delayed. But let's hope not, because I just think it's in the interest of Canada and the interest of British Columbia. Now, it's not a cross-Canada pipeline. It's just a British Columbia pipeline, which makes it even more interesting of these British Columbia assets. So we've seen a nice tick up in the share prices in some of those. There aren't that many, but some companies that we follow around the sort of the Fort St. John area, and BC has emerged already. BC investors in those companies have emerged as an early beneficiary of the change in the environment following the beginning of the Russia-Ukraine war. So war is an awful thing, not only for the destruction and death that leaves in its wake, but it also disrupts the way people have interacting and socially, but also in business. And a lot of people, I think, are coming to grips with that, and including the President of the United States, who is now the same president who canceled the pipeline on day one, is now begging companies to oil and gas companies to produce more oil and gas. So, things have changed dramatically on February 24th, and so far, Canada is looking pretty good. And we've been upbeat on Canada beginning of the year, and the events of the unfortunate events in Ukraine do not change our view. If anything, they've increased our conviction that because of our resources, Canada is going to be one of the attractive investment themes for the foreseeable future.
Ted, Bitcoin. Now, again, there's always controversy, cryptocurrencies. There's no real asset to back it, and yet still fascinating, and people have been dealing with it now for how long? 15 years?
Well, I would suggest that there is a big asset behind Bitcoin, and that is its network of people that use it. So it does have a strong use case on the network side. Now, you could say it's an intangible asset, for sure, but it does have value because of the people who use Bitcoin. Now, if people were to stop using Bitcoin, then its assets, its value as an asset would probably decrease. But last time I checked, there was about 81 million users on Bitcoin. That's as of a company called Statista. Just looking that up. And there's a number of different ways of valuing Bitcoin, but the network effects element to it is certainly has a lot to do with the value of Bitcoin. So, with respect though to the ebb and flows of the value of Bitcoin, the number of people using it and it changes, and it changes based off a whole bunch of different factors. When you have a bit of a mania, you're going to have more people buying and selling it. When you have a lull, you have a kind of a bear market, then you're going to have a fewer and people using it, and so the value will go down. So and that's like just one aspect of the valuation of Bitcoin. But I think Jim, what you're getting at is like there's no kind of tangible sort of buy one Bitcoin and you get X amount of fiat, because it's not a fiat based currency. It's its own system, and yes, people do convert it to fiat, but that was not the original intention of Bitcoin. So that being said, it has, in terms of its value against the U.S. dollar, it has been increasing quite a bit since the war in Ukraine. And now there is a political crowd that will say, well, that's because people are trying to evade sanctions. Well, there's zero evidence of that. Okay, there's a lot of hysteria about that, but no one has said, oh, look, we've looked at this suspicious activity from Russia and over to this bank. I mean, if there's been that kind of evidence presented, I missed it. And, I'm sure it would have been all over the place, and Elizabeth Warren would be the first to be tweeting it all out. So, and she's, for those who don't know, she's the policy outlook for what the Federal Reserve can do to protect the value of the U.S. dollar, and U.S. dollar being the core reserve currency of the world. They have to act aggressively against inflation, but there happens to be this war going on now. And it's an important war for NATO that is not something that they can just, at this point, have shown any interest or have shown any signals that they're not going to be fully engaged in supporting the Ukraine as much as they can without getting directly involved. So that means financially supporting them. That means spending money on arms. That means borrowing money in the treasury market to pay arms suppliers to arm Ukraine. So, this is a whole new dimension that is good for probably defense contractors, but it's not going to be great for productivity in the Western economy. Look, I just, it's got a chuckle. We hear about, now the Russia-Ukraine war means we have to double down on renewable energy and hurry up on the energy transition. Okay, fair enough. Sounds good to me. And Germany is also going to increase its defense budget to 2% of GDP. Okay, so this is the European Union that really kind of dragged its feet in spending money on the on an energy transition to promote clean energy and it wasn't until really the last few years that Europe decided that they may have to increase their commitment financially, i.e. going out and borrowing money to invest in green energy. It wasn't until Ursula von der Leyen took over the EU presidency in December 2019 where it even became it was even put on the table that there would be Euro bonds to invest in green energy. So this whole sort of idea that, we're just going to speed up our transition using green energy, fine. But if you're going to do it, you're going to have to borrow a lot of money. And the United States is in a similar predicament with the Democrats in that they want to increase green energy, but they also want to increase traditional energy production now. And so the President of the United States has invoked a measure today, an act from I'm not sure what it was called. I don't want to get the wrong name, but it's the Defense Production Act, I believe. And basically, what it allows, I believe, if I got this right, is for the government to spend more money to support production of battery metals. So, and by the way, if I understand this, they're not talking about cutting through red tape and saying, this allows us to direct this mine will get built regardless of what. No. What it does is allows the government to support private companies to do feasibility studies and meet all those environmental requirements. So that seems like a pretty expensive proposition to me, and it'll be great for if we have any environmental consultants and mining engineering consultants on the line listening. I mean, that's good news for you guys, and gals. But whether it's going to get battery metals produced in the United States anytime soon, we'll have to see. I wouldn't bet a lot on it. It's still mining's still a tough business, and I don't see anything out of the White House today that's made it less tough. Just maybe less expensive for shareholders to wage these tough regulatory battles. So, look, we've got basically an inflationary environment with the war, right? So that's what I think is driving gold stocks and could be driving Bitcoin. And the reason why I say that is because, yes, we've seen a nice rally in Bitcoin, but, it had been trading like a tech stock earlier in the year. There's one line of thought out there that's because when you get excessive amounts of leverage in the economy and in the crypto ecosystem that Bitcoin, once you get to a certain point, Bitcoin does start to trade like a highly levered NASDAQ stock. Now, some of that leverage has been worked off. We will have to see, though, if Bitcoin can go its own way from the NASDAQ and the S&P 500. Since the war started, it appears it's doing its own thing, but, we will see. And certainly gold is doing its own thing. And, and that's what you would expect it to do. And that's why I think you're seeing, gold stocks doing okay, even though, gold has had its ups and downs and, it's got the usual people coming in and trying to short it at a certain level. And, that technical, all the usual technical things everyone's used to in the gold market. But I think, the gold stock investors are seeming pretty upbeat about the prospects for gold. And Jim, I just want to point out, like, there's a lot of media attention on this war, but we're going to have peace talks, and this isn't going to last very long if they get an agreement. Well, you look at the Vietnam War. The Vietnam War went on for 20 years, basically, and starting in 1955, and in 1968, they started what was known as the Paris Peace Talks. And the Paris Peace Talks went on and off for almost 5 years. So, yes, again, April 1st, they're having another Zoom meeting between Ukraine and Russia. And you've just had the U.S. president say he's going to release 1 million barrels of oil a day from the strategic oil reserve. And, the history of Russian military strategy and just the approach to war, and I'm not a military expert by any stretch, but just, based off of some major conflicts, they are prepared to go in it for the long haul. I mean, it started the World War II, as all your listeners know, on the back foot, but who ended up winning and persevering through some very tough times? It was the Russians. So, they, went into Afghanistan and toughed it out, and they eventually pulled out of there because the Red Army was losing. But, the same thing happened to NATO. So, just coming to any conclusion that this is, that we know how this is going to unfold, I don't think we do. Now, look, it would be great if it did unfold and a peace agreement was struck. But the underlying geopolitical trends that have been set off since February 24th are not going to reverse for a long time, may not even reverse in my lifetime. We've got a major shift change, and it's got a lot of implications. And just, getting back to this oil reserve release of the American administration, if I were, I don't want to put myself in Putin's shoes, but I can see a scenario where, Putin will look at that and go, they're going to deplete as much as 25% of their oil reserves. Well, let's see what they do after they deplete it. Are they going to do another 25%? Like, if the Russians are in this prepared to do this for a long time, I'm not so sure that Western democracies are ready for that. We will adapt. The NATO alliance will adapt for sure. People always adapt to difficult situations, but things have changed since February 24th. So, Canada's, again, we're still bullish on the Canadian market, the resource areas, and also the financials, because they are also tied to the resource area to a large degree. And in terms of the housing risk, well, a lot of that's been offloaded onto the taxpayer. So, I wouldn't get too bearish on the Canadian financials either. So, Canada is still looking like a good place. And, and for, I guess, first time in a long time, I think gold stock investors do have reason to be optimistic. Then it gets down to, where do you find the best opportunities and the like. And, we released our top gold report, just this week for March, and it's got stocks that meet our screens. We're not fundamental analysts for gold. We don't go property by property and or evaluate teams. We're just a quantitative shop that looks at fundamental screens and insider screens and some technical screens, but it was a pretty good starting point for some names. Sometimes they work out, sometimes they don't. The mining industry, of course, is very, very tricky, and that's why a diversified approach is very important, even in gold sectors. So, but that being said, I still think you can do better looking at individual names than buying an ETF. But of course, ETFs aren't a bad starting point in this environment where I think, the risks are very, have changed quite a bit over the past month. So I think most of your listeners understand that. But I think much of the world does not understand that. Much of the investing world does not understand that. And, we may have seen a bit of a head fake here with the NASDAQ. And it remains to be seen whether this was a head fake with Bitcoin or not. And we'll only know. We have the non-farm payroll numbers come out on Friday. Does Bitcoin trade like the NASDAQ QQQ ETF, or does it do its own thing? That'll be important for Bitcoin. And I'm quite confident that gold will do its own thing.
Friend of the show, Eric Haddock, who does cycles, and by the way, he said the war cycle that goes in 80-year batches would peak in 2022. Guess what's going on? A war between Russia and Ukraine. Anyway, he said Bitcoin appears to be tied directly to the S&P 500. Whatever the S&P does, Bitcoin does as well. We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, the Canadian dollar has finally reached 80 cents U.S. I thought this would happen a lot faster with high crude oil prices, but it still did. What's behind that?
I think the Canadian dollar has two competing winds blowing its way. You've got the tailwind of crude oil prices and commodities, and you've got the headwind of the Federal Reserve talking tough on raising interest rates and tightening financial conditions, which is bullish for the U.S. dollar. So, we'll see how the Canadian dollar goes. It's I wouldn't be bearish on it. I'm just agnostic really on the Canadian dollar, to be honest with you. I can't see a really strong bearish case for it right now. Because commodities are doing so well. The housing market in Canada is, still pretty much on fire. It probably will cool off at some point. You have other experts that come in and talk about that. But unless we see a major correction there, I just can't get too bearish on the Canadian dollar because it's a beauty pageant, right, Jim? You got to stack it up against all the other currencies out there. So, we got to keep that in mind. So I'm not too worried about the Canadian dollar, but we'll just have to see how the commodities do, and things I think are looking pretty decent for it. Although I am surprised it probably hasn't gone up more than it already has. But again, that could just be a factor of people favoring the U.S. dollar right now.
Ted, some new things going on at the Canadian Insider Club. What's going on?
Well, the Canadian Insider Club is our retail package that we offer for people on the CanadianInsider.com, and that gets access to core kind of Inc. research reports. What we're doing on Inc. Research, though, which is our premium service, which has all the filtering and the screening capabilities that the really kind of sophisticated investors, do-it-yourself investors, hedge funds, and institutional investors use. Though what we're making some changes there. We're basically going to be offering some free memberships into our premium Inc. Research platform for those who are willing to come and help us with a new project we're doing on Web 3.0 called Vivaville. And basically, what we're trying to launch with Vivaville is a community-based project that will bridge the divide, hopefully between digital and real assets. And by the way, on Bitcoin, I know there's a lot of different opinions on it. I want to get back to something you said before the break, and that's how Bitcoin trades with the S&P 500. I've looked at the correlations on them, and they do move from time to time. And recently, yes, it has been moving with the S&P 500, but over time, it's much lower than it has been recently. So I think it does move ebb and flow. But that being said, the goals of many hard asset investors are very similar to the goals of digital asset investors. And believe me, it drives Bitcoin investors crazy when they see it moving along with the NASDAQ. And to the same extent, I'm sure it drives sort of real asset investors a bit nuts when they have to keep hearing about, Bitcoin and crypto. But, there is a common ground between the two. And the common ground is protecting your wealth and uncovering opportunity during turbulent times with the financial system and hedging the risks with the financial system. And, that is a ground that I think we'd like to explore and build a community on. And it'll be a community, it's a community called, we've dubbed Vivaville. And, we'll talk about more about this in the future. But basically, to build this community, it has to be built by people with software experience, has to be built by the people who are advocates for bridging the digital and real asset divide, has to be built by lawyers who understand how to build a decentralized community-based organization, also known as the DAO, decentralized autonomous organization. So it really requires kind of an old-fashioned community effort, but on a modern platform. So we're hoping to, Inc. we want to take kind of the lead in early stage on this, but we're not going to do it on our own. We're hoping to attract talented people to shape the mission, shape the design. And we're going to start off with an NFT platform which creators will be able to use, and Inc. We'll provide an example of, I think, what you can do as a researcher, a hard asset researcher, a mining researcher, oil and gas researcher, how you can use NFTs to get the word out and maybe reach a whole new area in the market, a whole new group of investors, people who are interested in the digital asset space, but who should probably also be interested in the real asset space and vice versa. So, and I talk about investors, I mean people who are looking for investing ideas. So just to be clear on that, if you're a newsletter writer, you're obviously reaching out to people who are interested in investing. So this isn't, I'm not talking about an investment. I'm talking about a platform for people to exchange ideas about opportunities in the real asset space and also the digital asset space and where they could come together. So it's very early stage, and what we're hoping to do is attract some talent in those key areas, software development, legal, and marketing, to help us build that. And it's very early stage, and as I said, it's from the ground up. And for those who are interested, we haven't got it up yet, but within the next few days, we'll have a new subscription page, membership page on inkresearch.com. And the fees are going up for people who just want to come and pay and not get involved with the Vivaville project. That's fine. But there'll be opportunities for those who want to build a community to come with us and get access to all our premium tools while we build it together. So for those who are interested, who have those kind of skills and who are interested, in helping us build, check it out. Check it out in a few days on our subscribe page. And, otherwise, of course, it's still available. Our premium service is still available for those who want to pay. And, of course, the Canadian Insider Club and Insider Tracking are also available, different tiers. Our Insider Tracking is, I think, it's basically a $10.99 US a month. So it's our budget budget offering. And, it does, for people who just need alerts and some key reports, it does the trick, and that's all good. So, check out what we're going to do on Vivaville, and hopefully some people will help us build it along the way, and we can get the Bitcoin enthusiasts and the gold mining enthusiasts together, working on the same page for the better, and build a better world and build a better investing environment for everyone. So that's the lofty goal. We'll see how far we get, and it's just too bad that this is all taking place during such a gloomy time on the geopolitical front, but that's the world we live in now, right, Jim? So we have to press on.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
If you have any questions for Ted or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.